Thank you. Senator Banks.
Thank you, Mr. Chairman. Chair Powell, can you talk about how our interest rates compare to other first-class countries around the world?
At the higher end.
And how does that affect the United States?
Well, I mean, I think that reflects a couple things. One is just that the U.S. economy has outperformed, has been stronger than others. And I mean, I don't want to pick on any other nations, but many other nations have had much lower growth, now have lower inflation, and are, have pretty low growth, whereas the U.S. economy has really been the outstanding performer and remains that to this day. That implies somewhat higher rates.
So you say it's higher than most of first-class countries. Can you talk about historically where we've matched up with other countries?
Yeah, I mean,
welcome back to America First, Patriots. I'm your host, and today we're breaking down some fascinating testimony from Federal Reserve Chair Jerome Powell that reveals exactly why America's economy continues to dominate on the world stage. If you believe in American economic supremacy and want to stay informed about what's really happening with our nation's financial leadership, make sure to hit that like button and subscribe for more America First economic analysis.
Yeah, I mean, so let's just go back to when the pandemic hit, for example. We were at, we had very low rates during that era, but they were by far the highest in the developed world because the U.S. economy was the strongest. The European Union had negative rates. I think the Bank of England was at 75 basis points. I think we were at 2.4%, so we were meaningfully higher. And again, it was a time when we were just, our growth was higher, and their growth was lower, and their inflation was lower. Our inflation was fine, probably about the same as ours. So I think we've generally had a little bit higher rates than those countries because they have slower growth, older populations, lower productivity, those kind of things. We have the strongest economy in the world.
Globally gone up as well?
Sorry?
Have interest rates in those countries globally gone up as well?
Well, they went up.
The U.S.?
All of those countries had their rates go up quite a bit during the global pandemic inflation, right? And as you know, many of them have been cutting their rates, and we had been too, and we'll at some point resume that. But we're 100 basis points lower than we were. I think if you take the EU and the Bank of England, they've both cut a little more than that.
How recently?
Recently, but But I think you probably read this, but they're either at or close to the end of their cutting cycles.
I know there's been a lot of talk today about deficits and the national debt. But how much does tax policy affect the economy in the U.S.?
I mean, it has big effects over time. It's really not something that drives what we do. It isn't. But I think tax policy plays over the long run a huge role in incentivizing investment, which helps growth and things like that. I think it's very, very important over the long run. Certainly more important than monetary policy.
Would a $4 trillion tax increase on middle-class Americans affect the economy?
Now here we're getting into the bill.
I understand. I'm asking how that would affect the economy and according to your data.
I'm trying to not make any direct comments on the bill today, if you'll forgive me. But I take your point.
Okay, I am trying to make a point, but there's got to be data that you sit on somewhere that would suggest that large tax increases would affect the economy, would stall economic growth in the U.S.
You could certainly get that out of a model if you wanted to. I mean, but again, I'm inevitably going to be commenting on the bill, right? If I answer that question, a lot
of talk today about inflation. You've already agreed that inflation is down from where it was a year ago, and would you say steadily declining?
Has been, yes. I more than agreed to it. I'm very pleased by it.
And all of the experts and so-called experts tell us that tariffs lead to inflation, but you seem to have suggested already that inflation is, if not under control, close to being under control.
So inflation's in a really good place. It is definitely in a good place, and we have a forecast, and so does, by the way, every other brand name forecaster in the country, which is very similar to ours, that there will be some inflation from tariffs coming. Not yet, but over the course of the coming months. And I think it's reasonable to expect that because someone has to pay. This is hundreds of billions of dollars of tariffs we're taking in. Some of that's going to fall on the consumer. Not all of it's going to fall on foreign manufacturers. And that's the only insight we have. And we're just kind of wanting to see more data on that before we move.
One final question about data. Our trade deficits with China, the EU, Canada, and Mexico have all significantly dropped recently. What does the data tell us about that?
Well, I think that's
how that would affect inflation.
How it would affect inflation. I don't know that it has implications for inflation, but it obviously reflects the tariffs. I think recently you've seen Chinese imports come down quite a bit.
Thank you. I yield back.
Thanks.
Senator Blunt.
Let me tell you what I saw in this congressional hearing that should make every patriot proud. Chair Powell just confirmed what we've been saying all along. The United States economy is absolutely crushing every other developed nation on earth. While Europe is dealing with negative interest rates and economic stagnation, we're sitting pretty with the strongest economy in the world. Powell laid out the facts, and the facts don't lie. Even before a pandemic hit, when other countries had their central banks at rock-bottom rates, America was maintaining 2.4% interest rates because our economy was so much stronger it could handle it. The European Union had negative rates. Folks, negative rates. That means they were literally paying people to borrow money because their economies were so weak. Meanwhile, America was charging a premium because we had the economic strength to back it up. This is what American exceptionalism looks like in practice. We're not just talking about feel-good patriotism here. We're talking about hard economic data that proves America outperforms every other major economy consistently. Powell specifically mentioned that other nations have much lower growth, older populations, and lower productivity. That's diplomatic speak for saying they can't compete with American innovation and work ethic. Now, let's talk about what happened during the global inflation crisis. Every country had to raise their interest rates to fight inflation, but here's the key difference. Many of those countries have already cut their rates more aggressively than we have and are close to the end of their cutting cycles. You know what that tells me? Their economies are so fragile, they can't handle normal interest rate levels. They had to rush back to artificial stimulus just to keep their economies from collapsing. America, on the other hand, has cut rates by 100 basis points, but we're doing it methodically and responsibly. We don't need to panic cut our way back to zero because our underlying economic fundamentals are rock solid. That's the difference between leading from strength versus managing from weakness. The senator brought up an interesting point about tax policy that every conservative should pay attention to. Powell acknowledged that tax policy has huge long-term effects on economic growth, particularly through incentivizing investment. This is basic supply-side economics. Folks, when you let people and businesses keep more of their own money, they invest it, create jobs, and grow the economy. It's not rocket science, but apparently it's too complicated for the big government crowd to understand. Powell was smart to avoid getting dragged into political commentary about specific tax proposals, but his point about modeling economic effects is crucial. Any economist worth their salt knows that massive tax increases would absolutely stall economic growth. The fact that he wouldn't directly criticize potential tax hikes doesn't change the economic reality that higher taxes mean slower growth. Here's where things get really interesting for America First patriots. The discussion about trade deficits dropping with China, the EU, Canada, and Mexico is exactly what we should expect when America stops being a pushover in trade negotiations. Powell confirmed that these drops reflect our tariff policies, and that's a win for American workers and American manufacturing. Now, Powell did warn about potential inflation from tariffs, and that's a fair economic point. But here's what the establishment economists don't want to admit. Sometimes short-term costs are worth long-term strategic benefits. When we use tariffs to bring manufacturing back to America, reduce our dependence on foreign supply chains, and level the playing field for American workers, that's not just good economics, that's good national security. The inflation discussion reveals something important about the current state of our economy. Powell admitted that inflation is steadily declining and in a really good place. This contradicts all the doom and gloom we hear from critics of America's economic policies. Despite global challenges, supply chain disruptions, and geopolitical tensions, American economic leadership has managed to bring inflation under control while maintaining our position as the world's strongest economy. What really stands out to me is Powell's acknowledgement that the United States has the strongest economy in the world. This isn't partisan cheerleading. This is ahead of the Federal Reserve stating facts based on hard data. Our growth rates, productivity levels, and economic resilience continue to outperform every other major economy. This hearing demonstrates why America First economic policies work. When we prioritize American workers, American businesses, and American economic interests, we get results. Other countries are struggling with stagnant growth, demographic challenges, and economic weakness, while America continues to set the pace for global economic leadership. The bottom line, patriots, is that this testimony confirms what we already knew. America's economy is in a position of strength because we refuse to accept the managed decline that globalist policies would impose on us. While other nations accept mediocrity and dependence, America continues to lead from the front. If you found this analysis helpful and want to stay informed about America's economic dominance, make sure you're subscribed to America First. We're going to keep bringing you the real story behind the headlines and the economic data that proves America First policies deliver results. Hit that notification bell so you don't miss any of our content. And let me know in the comments what you think about Powell's testimony and what it means for America's economic future. Remember, patriots, we're not just analyzing numbers here. We're documenting the continued success of American economic leadership in a world where other nations are struggling to keep up. That's something every American should be proud of, and it's why we'll keep fighting for policies that put America first in everything we do.